All right, we are live for the Friday edition of the Mike and Mario Show. Back at it again. Looking forward to connecting and just talking about the events that unfolded this past week, as well as looking ahead as we draw towards the end of 2022. But Mario, how you doing, my friend?
Yeah, I'm doing fine, Mike. It's getting cold here now.
Yeah.
It's pretty cold. I think it was relatively warm up until recently, but the winter's coming.
Mhm.
And yeah, we're going to look a little bit at counterparty risk,
Mhm.
which is something that we've covered for many years, you and I, especially to do with the financial markets and how important it is to have exposure outside the system, so
Mhm.
we don't have counterparty risk. Of course, holding gold, physical gold and silver is a way to do it. Anything that's physical in your possession, your home, doesn't have counterparty risk. And I think the biggest stake, apart from all the connections uh, between FTC and other entities, the biggest take for me about this crisis is counterparty risk.
Mhm.
And it's ironic that cryptocurrencies and Bitcoin and the blockchain were supposed to solve that problem,
Right.
becoming that you didn't have to have trust because it's a trustless system.
Right.
The coins themselves might still be trustless, and I think Bitcoin is.
Mhm.
You just have to be careful where you keep it.
Right.
You keep your cryptos.
Right, 100%. And I think, like for me personally, I've been following this FTX situation just because it has really exposed how interconnected the system really is. Like, even though, as you was describing, the crypto is designed to be away from the legacy system, but then again, it's dependent upon the funds coming out of the legacy system into the crypto space. And FTX is really exposing how interconnected it is, because we're still finding out how much funds was trapped in FTX, and we still don't have a final number. And I actually saw an article talking about, as of now, globally, it might be up to 1 million or so creditors. Of course, institutions, individuals, or whatever. It's like that right there is going to shake some stuff out. And then, as of recently, exposure from the banking sector. And so I did a video earlier talking about how just FTX is basically exposing all the counterparty risk that's trickling up towards the legacy system, i.e., the too big to fail banks. And so we can just jump into that if you want to. But here is let me share with you. I got lots of articles here, so bear with us here. But here's a headline that just, brings more of the truth to light. And so this here talks about JP Morgan Chase, Wells Fargo among potentially exposed FTX parties. And so this right here could be very concerning, just because, we didn't know how much say so or how much currency the banks have in this space until it's exposed from FTX. So
We won't know for a while. And there's another company called Genesis Trading,
mhm.
the Winklevoss brothers. They had to close some kind of activity
Oh no,
because
Gemini. So Gemini's a Winklevoss, yeah.
Gemini, yeah, Gemini, Genesis. There's also a Galaxy,
Mm-hmm.
who is an ex Goldman Sachs guy. He's
Yeah.
got a crypto hedge fund, and a lot of these ex Wall Street people, they probably get a lot of their funding from Wall Street.
Mm-hmm.
So, I mean, we can only speculate for now because we don't know any
Right.
more about it. But yeah, and it definitely also, um, how can I say, discourages people
Mm-hmm.
to get involved in crypto,
Right. Right. It's going.
especially people who are not aware of what crypto is all about, who haven't done their homework like you and I have.
Mm-hmm.
For example, I actually uh, decided recently to put a lot of the coins that I get for my videos on Steemit,
Mm-hmm.
D2, other blockchain platforms into Ethereum and put it into to stake it. It's not that much, it won't
Yeah.
hurt. But I'm doing it now because I think it's probably not a bad time.
Right.
Just speculate a little bit because it's gone down so much.
Right. And that's the thing. Everybody who has exposure to that space is definitely rethinking some things, just because the contagion is still unwinding. And before we move forward, I want to show you some of the names listed here. And then it says here contract counterparties. So here is just some of the details that was given after the bankruptcy filing and them listing some parties and things of that nature who have exposure. And so it just talks about 5% equity in Samuel Bankman-Friedman and all his board or whoever. Professionals, Chain Analysis, which is a blockchain editing company, banks, financial entities, Bank of America, Circle, JP Morgan Chase, Wells Fargo. Silvergate is a big one because they're the ones that's issuing all these loans against crypto. I think Michael Saylor is heavily indebted to them.
Yeah.
Then we have
Circle, by the way. For Circle, read Goldman Sachs.
Yeah. Oh, yeah. Okay. So yeah, that's
Goldman Sachs. They own Circle.
Okay, so that's going to be more. And then I've watched all this week how Kevin O'Leary and of course we have Tom Brady, Steph Curry, a part of a class action lawsuit. So the counterparties, like, a lot of people thought they were clear scot-free after signing their deals of whatever they were signing up for. But then again, once that one domino falls, they're all starting to fall simultaneously. So just as you mentioned before, the importance of being in the real world with something physical, people are realizing that now. It's going to be hard also for this space to move forward if it's meant to actually succeed. And the only way you can do that is to bring in fresh capital, i.e. your retirement funds and your grandmother's savings. And a lot of people right now are,
the thing is, when I started looking at Bitcoin and cryptocurrencies back in 2012, it was supposed to be outside this legacy system.
Right.
It was supposed to be, you just put your money there, and you don't get your pension involved because your pension is through Wall Street. And unfortunately, ever since around 2017, 2018, Wall Street, and I could see that, they infiltrated the crypto space. And they turned it into a second version of Wall Street.
Yeah.
I think that's a bad thing. It's a big step back. I even saw that a decentralized exchange, which is supposed to be decentralized and safe, is in trouble as well, which is difficult to understand.
Now, speaking of which, let me share something with you real quick. So here is more information. So Ontario teachers pension plan to write down 95 million FTX investment to zero. And so as a part of all the, the interviews that's been given by a lot of famous people out there, everybody's writing down debt. And I'm thinking, like, you're writing down debt, but then again, those are your investors' capital. So how does that impact the overall operations if everybody's writing down their exposure to FTX right now? So,
well, I mean, it's not even to 5 million. It's to zero.
Right.
And I think whoever at that teacher's pension plan fund decided to put money with them is probably going to get the sack, or should get the sack. Because it's funny, because this guy, SBF, he ensnared so many people into it. And I think he had a lot of support as well from, we don't know yet, but it's a much bigger story. And a lot of you probably know that, those of you who are watching.
Yeah.
I think it could have been a deep state operation to how can I say, discourage people from decentralized cryptocurrencies, even though FTX is not decentralized. And it's ironic, and maybe you can bring it up, that the New York Fed and 12 banks started testing CBDCs just a few days after this incident.
Right. I didn't find that to be accidental, to say the least, because it flew under the radar. And so here's just a headline here: banking giants and New York Fed start 12-week digital dollar pilot. And then, another article here, this is directly from the Fed here. It says New York Innovation Center to explore feasibility of a theoretical payment system designed to facilitate and settle digital asset transactions. So this happened in the midst of all the contagion in the crypto space.
And we found out now as well that Gary Gensler, who's ex-Goldman Sachs, he's the head of the SEC, so the main regulator, his boss at MIT, because he went to teach at MIT a few years ago. His boss at MIT is the father of that Ellison girl from the Alameda hedge fund, who was the girlfriend of Sam Bankman-Fried. You kind of, there's a lot of red flags in the fact that the New York Times was going to have an event with this SBF plus the president of that country that starts with a U,
Right.
Zelensky. Uh, who else is going to be there? Larry Fink of BlackRock was going to be involved,
Janet
and
Yellen.
Janet Yellen, the U.S. Treasury Secretary. It just the thing is, if you know about crypto like I do, because I got involved and looked at it almost at the beginning. Uh, they're not people who want to deal with Janet Yellen or Larry Fink. They're trying to escape those people. So SBF for me, he's like they used him.
Yeah. He was definitely just the front man amongst many other people who end up making it into the spotlight and getting all the attention. So I always look at, like, even the politicians, the people who are allowed to step out in front and be the spokesman or the cheerleader for, or the person who initiates that first piece of legislation to change the world. Who's backing that? Who wrote that legislation? Who's funding it? That's where you got to follow that trail, and then stuff comes to the light.
Even Mr. 45, we can't really trust everything he says because.
Right. And that's where, he's back in the light now. He's going for another term. I'm thinking, like, just once again, I think it's more of a distraction.
It helps the mainstream media because they've got a lot more to talk about now.
Right. Exactly. All right. So let's keep it moving, man. We can just, because this spillover will make its way into the legacy system at some point.
That's why it's important. Again, the counterparty. That's why it's important for people. In my opinion, I'm not giving advice, to have a little bit of, if you can, silver and gold outside the system. It reinforces that strategy.
Yeah. Very true. Very true. Okay, so there's more stories worth touching on. So feel free to throw out, topics, subject matters if you guys want to. Now, with this, I'm curious to get your thoughts with this digital dollar, because that is a major story, especially when it comes to this 12-week pilot is designed to work with the big banks and basically allow payments to be transferred utilizing central bank liability. So they're saying it's an example. They're using an example of tokens, but we know it's going to be the CBDC. Now, one of the biggest threats was that they'll never introduce a CBDC because it's going to disrupt the banks. It's going to alleviate the banks, and the banks don't want that. But with this exercise here, they're working hand in hand, utilizing the system all under one ledger, the reliability network, and so like that. So my suspicion is that as we move further into tighter market conditions, something will break, and a part of the providing liquidity to the system will be through this potential method rather than the old way that, this is where I'm going to stand until, I'm proven otherwise. But, what are your thoughts on this? Is this CBDC intentional for a rollout sometime in 2023, 2024, once the official rescission actually happens?
Well, I'm not too sure. And it's quite, I haven't really looked closely into that, but it seems like instead of having a cash or a checking system, they'll just send the CBDC to, let's say, JP Morgan, and JP Morgan will credit the clients.
Depositors,
We thought, I guess, earlier that if we're going to have a Fed coin, that would get a Fed wallet, but they might not get involved in that. I think they can't because of legal reasons. And I think Jay Powell mentioned that I think, a year ago. You still have to get an act of Congress for that. So people can't really bank directly with the Federal Reserve. So that's probably why they're doing that. I guess one way to have the Fed be directly sending its people is if there's a banking collapse and JP Morgan and all the other banks go under. But
it's a lot to process, to say the least. But let's touch on, of course, the debt market. Of course, as of now, I was looking at. Let me just put this on the screen here. So I was just looking at the extreme inversion of the yield curve. So this is just as of now, and let's looking at these figures here, man. We got the 2 month, 3 month, 6 month, 1 year, 2 year, 3 year. It's completely upside down. And so, go ahead. I'm sorry.
No. Yeah, even the 1 month, for example, bill rate at
Mhm.
3.857. That's higher than the almost higher than, well, it's higher than the 10-year. Yeah, that's basically a signal that we're going to have a recession or a crisis in the next few months, because the curve inverted in late 2019, and then in March 2020 we
Mhm.
had a crisis, and I think it inverted in 06, 07,
Yeah.
and we had the crisis in 08. So yeah, and this is it has been inverting for a while, the curve, but now is accentuated. And the reason why it forecasts a recession is because usually the lending institutions, they borrow, let's say, 3-month money or 1-month money, and
Mhm.
with that money they lend out longer term, and they make money on that. Let's say they borrow at 4%, and then
Yeah.
they lend out at 7%. But now they can't do that. They're borrowing above 4%, and they're only getting 3.8 longer term. So, and the other thing as well, I spoke about that recently, is that the 30-year mortgage rate,
Mhm.
that that's continued to go higher. It's like above 7%, I think,
Yeah.
despite the fact that the longer term yield treasury yields have come down. So what that's showing as well is that lending institutions would rather buy treasuries than lend to the general public through
Yeah.
mortgages, because they think there's a risk. So yeah, the UK already and Europe, we're going into a recession. Even the government admitted it. Yeah. And I don't think the US is too far behind.
Yeah, and so I want to share with you a recent that I've shared it with you, but just the tweet from Tavi Costa, and he does a good job of basically just highlighting with them illustration here, just showing where we're at right now, and
Mm,
so how severe it is. And according to previous events over the last 50 years, whenever there was an extreme yield inversion to this measure of 76% or so, as he put here, we are now 70%, 76% with the Fed still hiking rates and doing QT. And so something breaks, and there's usually a reversal of policy. Now, one thing that I'm thinking like, okay, looking ahead. So, are we looking at possible spring? According to this chart here, how everything prior to now is labeled as an event.
mm,
So, will there be an actual event that we will look back and give it a name, or is it just a slow erosion of confidence in the financial sector in general, which will cause the Federal Reserve to dial back on their month or their
mm.
their hikes? What do you think?
I think there will be an event, really,
Mm,
because the last one, two, three, four, five, 6 times there were events, except maybe like, yeah, I mean, that was the double dip recession in the early 80s there. So, and yeah, I think there will be event. Could it be? I don't know what it's going to be. I think it's coming soon. It's probably coming in the next 12 months,
mm.
maybe even 12 weeks.
Yeah. Yeah, and that's the thing. Like, yeah, I just based upon all the information that's given to us now and how magnified things are globally, it just seems like spring is a ideal time frame for there to be some type of actual black swan event, or some type of financial contagion event, or something like that.
Or it could
So,
be next week.
or it could be next week, right? That's you never know in this world. But the midterms are now, I guess, over with. Or the Republicans has a House and Senate is the Democrats, so we'll get more stalemates when it come time to respond to financial crises. So they're gonna weaponize politics for sure, putting more lack of confidence in the system. So eventually the stock market will reflect it, because as of now it's relatively stable given the debt market. So it's like, okay. And then of course the Dixie, your favorite index, is down a little bit. I'm just messing with you. Man. So yeah, once again, just the contagion continues, man. Oh man. All right, let's move on. We got more subjects here. Let's touch on. Okay, so you sent me this article here about central banks, and I had a chance to go through this and just the negative consequences of QE. And I
Yeah,
think it has to do with the negative equity on central banks' balance sheets nowadays, if it even matters, because they're
yeah.
the issuers of the currency. So, what was your takeaway on this?
Well, the problem with QE now is that with interest rates going up and bond prices going down, their balance sheets, like you said, they're showing losses.
Mhm.
So if they just do QE to buy, um, willy nilly to buy bonds to make the price go up,
Mhm.
it could reflect badly on them, and investors might see that as a sign of inflation, like that article says. So
Mhm.
basically, it's saying that it's really hard right now for them to justify QE.
Mhm.
You might need a crisis to push people into treasuries to make the treasury prices go up, so
Yeah.
the Fed has an excuse to buy those bonds, so it improves their balance sheet. So yeah, or I guess he didn't mention that the guy from the FT. There's the head of the Dutch central bank
Mhm.
a few weeks ago said they could use their gold reserves to reliquify the balance sheet.
That would be interesting. So I've been following somewhat, and so even this article hints on the fact that as of right now, it actually gives a couple banks, um, in reference to their supposedly. Let me see. We got several banks that right now literally are, because you mentioned, because of the hike in interest rates, they're negative equity, and it's like, okay, so if central banks themselves are not they're not almighty. So at some point they're going to have to be
Oh yeah,
bailed out. Like, so is the role in a rush to go all of a sudden from Eastern nations that reassurance plan that they're trying to
yeah,
have just in case? Because
oh
who's going
yeah.
to bail out the banks at the end of the day?
Asia, they know well what gold means, and they can see the writing on the wall. President Putin has been warning the whole world for the last 6 7 months about the mythical values, and we're seeing now treasury holdings by foreigners
Mhm.
dropped by 4.1% in 1 month, the latest reporting period, which is quite significant. Annualized, that would be like 50% drop in treasury holdings.
Mm. Yeah. So
So yeah, and the thing about the balance sheet of the central bank, if it starts looking really bad, if it's in the red deeply, yeah, they'll keep running because central banks are above the law.
mhm.
But investors are going to say, well, their liabilities can't be worth much, which is the currency.
Currency, right?
So that means more. And people forget, a lot of people think that inflation is caused by higher energy prices, but that's totally wrong. I try to
Mhm.
tell people, but they still don't want to uh, accept it.
Right.
What that will mean, yeah, just more currency debasement,
Mhm.
more higher prices, because you buy things with currency, and
Right.
if that currency becomes worth less, everything becomes more expensive.
Right.
So that's the ultimate consequence of that, the balance sheet, and that's why those countries that you showed there, Chile and some others,
Yeah.
their currencies aren't that good.
Not at all. So yeah, you hinted at the sell off in Treasury. So this is pretty important, I think, to mention. So because you talked about was it we said 50% over the last how many?
If you scroll down,
Yeah.
uh, yeah, you see there uh, for official there. You see in August, foreigners held 3.904 trillion
Hmm.
treasuries, and in September it dropped to 3.7418, which is a 4.1% drop in 1 month. So if you multiply that by 12, you're almost up to 50% annualized. I'm not saying it's going to happen,
Yeah.
but it's not a good sign. If you look at China as well, uh,
Hmm.
they dropped from 972 to 933.
Hmm.
And I think Rafi Costa, not Rafi Costa,
Yeah.
Costa, he tweeted out as well, uh, going back 4 years for China, their holdings have dropped by about 400 billion. They
Hmm.
were they were up to like 1.3 trillion about 4 years ago.
Yeah.
So if you look at September last year, they're over a trillion and almost a trillion 50.
Yeah.
Now they're approaching 900 billion. So yeah, I think the writing's on the wall. And the other thing as well is the geopolitical situation. China is probably trying to get out of treasuries as quickly as possible. And why do I say as quickly as possible? Because I don't think they want to.
They take the risk. Take the risk.
Well, not even a risk. If they start really dumping treasuries, the rest of the treasuries they have could become worth a lot less.
Yeah.
It's like in the normal market. When I worked in the futures market, I remember this is a good story actually. We had one of the biggest insurance companies in Italy, and they're trading futures with us, and we found out that the trader was not supposed to have was kind of hiding the huge positions they had, and we had to get out of it, but I couldn't do it like in one go. It took me like 2-3 days because it's such a big position. It's the same thing with the Chinese. They don't want to dump it because that would drive prices, down very
faster. Right, and it would take a bigger loss. Interesting. So speaking of which, we keep it. We got. Let's get ready to take some questions, but I want to share with you an article real quick. I saw the Silver Institute. So make of it what you may.
Yeah.
Silver heads for the biggest deficit in decades, Silver Institute says. So they're basically forecasting and projecting that moving forward into the future, silver will become more important, and it's going to be sought after more and more for a variety of sectors. But then again, the above ground supply is not as plentiful as people would hope so. So that should definitely put pressure on the price.
And there are very few pure silver miners out there as well. And I guess the price of silver hasn't helped.
Yeah, not at all.
Because the low price of silver that we've seen in the last 2 years doesn't encourage people to fund these projects, which is a shame. I think, it depends on the mine, but some mines, like the cost is $17, some is less. It depends. But there's very few.
Right. Then you got the costs, energy costs. So all the factor in all the geopolitical events going on as well, which hinders or helps certain mines, whether they're small or big. So one of the things I want to mention real quick, is that just looking at this little graphic here, 2022, the demand for bars and coins.
Yeah, I know. That's silver squeeze, isn't it?
Yeah.
I mean, I think the silver supply has dropped by 110 million ounces since silver squeeze.
Yeah. So I anticipate also continuing into 2023, especially as uncertainty in the markets continue to rise. So, all right. So
maybe the younger people who have been in crypto, they might think, where can we, and they're going to be greedy because that's a lot of them were in crypto. They might get greedy in silver.
Right. And that's the thing, like the more the contagion spreads within the crypto space, therefore the more selling pressure, people will be dumping, unloading. Right now, everybody's keeping an eye on Grayscale because they're allegedly the biggest, Bitcoin holding fund. And so if they have to liquidate some things.
Was it Grayscale?
Huh?
What's it called?
Grayscale.
Grayscale. Okay. What about, have you seen that? Because there's a Bitcoin ETF. Apparently it's trading at a 40% discount.
Yeah, that's that Grayscale.
Oh, is that it? Oh,
great. Yeah, so let me see. I've been ranting on that too, but I had a visual aid, I erased it, but so Digital Currency Group, which is basically the big head honcho that has a majority ownership in a lot of these companies that are being exposed right now, the Genesis, the Gemini, and all. So they are the ones that are the owners of the Grayscale Trust primarily. And so there are rumors out there that they're needing some liquidity. So they're out there trying to raise funds. So everybody's trying to raise funds to cover these losses. So they're going to have to sell something. And that's going to put more pressure on the market.
A lot of people on Wall Street, fund managers and everyone, they buy these ETFs.
Right.
I've spoken to some of them and said, "Oh, I have a Grace, the GBTC. They call it GBTC, but I see today it's down another 5.6%.
Right.
So last month is down 26%.
Yeah, and that's a problem. So I'm sure a lot of investors are now wondering about the the long-term trajectory of their investment, so they're going to panic. And so, point of story is, as a crypto market has its fluctuations continually, it'll be easier to reach people and tell them about, hey, gold and silver, it's out of that digital world, but then again, it's something you can hold in your hands, and it's nowhere near previous highs. So when the race to the moon starts, you hold something real.
They've never gone to zero in 5,000 years.
Right,
Yo,
right. All right, so let's get to some questions if you want to. Let me see here. So let's feel free to throw out some thoughts, ideas, or questions in the chat.
Oh, there's a persistence over resistance has a question.
Well, we have Mario. Does the connection Gary Gensler has to ETH make you nervous at all?
I didn't know he had a connection to Ethereum, Gary Gensler. All that I know is has a connection to the father of the Alameda hedge fund girl who doesn't like stop losses. But I didn't know he had a connection to Ethereum.
I think that
It doesn't worry.
Ethereum.
I mean, I have a little bit. I said in the beginning that I've staked some Ethereum, but it's chump change. It's not much, and it's stuff that I earned through posting videos on Steemit and DTube. It's not money that I put into it.
Yeah, I think he might be referring to just Ethereum now that it's proof of stake now being categorized as a security.
Yeah.
And with that in of itself will definitely put downward pressure on
Ethereum. I think it's Ethereum. The thing is, when Ethereum was proof of work, it was as proof of work. It will never be scalable, and it's going to be very slow as well as proof of work. So proof of stake will make it a lot more scalable and quick, like EOS is proof of stake, but EOS never succeeded. And I was involved with EOS. I put some money in EOS.
Yeah.
So the thing is, I never thought Ethereum was going to succeed as proof of work, because it's much easier to use your debit or credit card. Ethereum is supposed to be the Bitcoin with a smart contract top, but it's too slow. Proof of stake, it could be a problem, because then you could get a few whales, Wall Street whales, own the whole of Ethereum.
The Ethereum Alliance is all funded by the big boys. So Microsoft, they all have a stake in the game well before the Ethereum chain was even rolled out. So Jamie Dimon, his bag is probably larger than most of the people on Wall Street, because the banks are a part of this. So I always believe that it was intended to benefit them.
Oh, they were involved in Ethereum even before.
Yep.
Okay.
Let me show you
that Russian guy, what's his name, who supposedly started it?
Oh, Vitalik.
So he's just like a banker's puppet.
It's my suspicion. So if you go to, let me just share this with you here while we on the screen. So if you go to,
tell you guys how much Ethereum I have right now staked, $77. So it's not going to break. So there you go.
So the Ethereum Enterprise Ethereum Alliance was formed before the actual blockchain was released, and a lot of the backers happen to be let me see here so I can show you some of the members. So a lot of the backers happen to be, so Microsoft is in here. There we go. Nope. So Microsoft is in here, Goldman Sachs, JP Morgan. So they were off, they put up the capital to do the development for this protocol back before it became Ethereum. It was Ether back in the day. So long story short, they've been a part of the growth process from day one. And it wasn't surprising that it went from proof of work to proof of stake, just because that gives it more, it's more centralized, put it like that. Like the people who have the most
it's very centralized,
right. So that's in their favor, because they are the ones that funded it. So it's good to say they're going to benefit the most. So
low blood pressure says proof of scam or proof.
All right, let me get here. So feel free to highlight everything in $1 the questions that stand out, or put a name in, and we'll try to get to them. And let me see here.
Oh, over here. Oh no,
where you at? Here's a question here. So you can speak on this part for Glint, because are you still involved with Glint? So it says here, does anyone know about UPMA compares to Glint? And so UPMA, I'm familiar with them. They're a company out in Utah. They have the gold backs and things like that. And it's a depository that's basically a legally designated company. Now that gold and silver has been reinstated as money in Utah, they're able to say that you can actually you can use gold and silver,
Yeah.
and they separate it from fiat. So you take your fiat, put it in the gold and silver, and you can actually use the gold and silver to pay bills.
Yeah.
In that system there. So it's quite interesting. But
It's a banknote with gold in it.
right. It's infused in it. So they're the ones that issue that.
Different than Glint. Glint is more digital, but they do hold your gold in an allocated account in Switzerland.
Mhm.
And basically, you have an app, and you've got your gold, and then you can use your prepaid card, debit or credit card, if you want to call it, and you can spend it. And it does you can spend it, let's say your gold. If you're in the US, it will do the exchange almost instantaneously from XAU to USD.
Mhm.
So yeah, it's not comparable to the UPMA,
Mhm.
but yeah.
They have a card as well that allows you to do it. But my thing is like, I'm not who's
Well,
most
if they have a card, then they have to also do the exchange,
conversion, right?
as you can't really go to Walmart and pay with a gram of gold. They'll say, "What is that?" You have to pay with $40 or whatever the gram is.
All right, here's another question here about privacy coin. It says, what do you think about the ban on privacy cryptocurrencies like Monero and Zcash? So as of now, there hasn't been an official ban, just more so scare tactics, I think, by the
Yeah,
government trying to fund
yeah.
some companies to try to break the privacy protocols. But I
The
think
thing,
it's more fluff.
the thing is, these private uh, coins or
Mhm,
currencies, they're just software created by people. Uh,
mhm,
so how can someone ban a software?
right.
If you're out, I think what they're trying to do is like stop people from being able to convert. Let's say, is it Monero
Mhm,
into fiat? That's what they're going to try to do.
mhm.
Uh, but if you find someone that wants Monero, yeah, they can't stop you from bartering Monero for, I don't know, for a car or
Yeah.
whatever.
Here's another question about Glint. Glint has a premium, so I'm not sure what
Ye-
that is.
Yeah, well, they have to. I think the premium has increased a little bit the
Mhm,
last 3 years, like everything has, but it's not as much as buying, let's say, an ounce of physical gold. But I'm not sure what the premium is right now for buying gold. It's probably not more than 2%, but don't quote me on it.
yeah,
But they need to have a premium. Let's say when you transfer dollars
business.
buy the gold, because if they didn't, they wouldn't be in business.
Right. That's crucial. Andrew Novak says, thanks for the info. Appreciate you, my man. Thank you. All right. How do you ban a plant? I don't know
Yeah.
that.
Oh, yeah, I guess.
So Jeff, you says, where did you guys meet?
Yeah. Jojo Wave says Bitcoin is also software. Mario. Yeah, I do know that Bitcoin is software, and
Right. And
it.
a lot of people use the Freedom of Speech Act, like, software falls under freedom of expression and stuff like that, First Amendment. So I'm like, I haven't dived deep down that, but yeah,
Yeah.
I'll run with that. So, but to the question about how do we meet, it was about 2 or 3 years ago. I reached out to you for an interview, and we've interviewed several times, and then you joined the Wise Talk
Oh,
crew.
yeah,
And
that's how we met. Yeah.
yeah, so I think I interviewed Mario maybe 3-4 years ago, eventually.
Yeah, the wise guys didn't really catch on, did it?
No,
And
it did, just because it was doing lockdown, so it served its purpose to try to help spread information fast from different people. But I enjoyed that.
yeah,
I
I
really
remember
enjoyed that.
Bitcoin Ben was quite a funny guy. I
Yeah,
haven't seen him around that much.
he
Is he
he got
still?
his channel got canceled.
Why is that?
I mean, he started going deep into, like, the health situation. I mean, he just went, he went extreme. So
Hmm.
So but he started another one, and as of now, a lot of things apart from George, George Gammon is doing his thing, but a lot of people just more so just went into hiding for the most part. But those were the good old days, man.
Rethinking the dollar. What did you work before YouTube?
For YouTube, so I come from the sports realm, so I do like sports training, coaching, things of that nature. So prior to COVID, that's my primary, but since then
Jeff,
I've just ventured into the digital stuff.
Jeff Hughes says you still are wise guys.
Appreciate you. So
Yeah.
let me actually, I'll pull up one of the. I'll just show on the screen here one of the old street, even Trader Steph back in the day. It was nice hanging out with Trader Steph, but
Oh yeah, I was still at another angle here in the room. I had my
so yeah, so here's the wise talks from back in the day. This was 2 years ago. So yeah,
George Gammon. He was very quiet. He didn't say much, did he?
yeah, he chimed in every blue moon. That's before George, really took off.
Yeah.
But good old days, man. All right, what else we got? Any other questions out there? Wise guys, a great way. We got
MW says Switzerland is not neutral anymore. No, they're not. Their neutrality has been diluted.
yeah. Everybody's responding now to the Federal Reserve hiking. Like everybody's trying to figure out how to contain their own mess, keeping things from spilling over in their own country. It says how track the metals. Here's how are they going to track the metals? Credit card, bank card type thing. MW, what exactly refer to track the metals?
Well,
I think if you're talking about just you sell that they sell the metal and then put the fee out on your card and then you spend it. So if that's
are you talking about Glint, or I don't know what he's talking about. Like does he mean the authorities tracking how much metal you got? I guess I don't know if the bullion dealers or the coin dealers keep they have to keep records of what you do, but yeah.
I see more thoughts here. Nige just said, did you know a gallon of gas is still a quarter? Pre-64 still buys a gallon. Crazy.
Yeah.
It's held its value. That's the importance of real money, real sound money. All right, we are 42 minutes. I don't see any more questions out there, so I appreciate you guys for hanging out. We at about 226 online. If you haven't hit that thumbs up button, as always, that'll help your boy out. So, Manico64, you guys know where to find them at as well. All right, so we are heading to the weekend. Next week we got Thanksgiving, so it'll be a very full week, to say the least. But yeah, so what are anything that's coming up worth paying attention to that we should keep our eyes on?
Well,
So what do you keep an eye on?
I think the Fed will be not next week, but the week after. You're going to have the FOMC. I think December 3rd and 4th.
Okay. So that'll be worthwhile.
Yes.
They're already front running what they're going to say. So we already know it's 50 basis points in December 15th. So,
but I guess Thanksgiving will slow things down around the world. It's only the U.S. that has Thanksgiving, so it'll be quiet Thursday and Friday markets, and but here it's business as usual, though.
Yeah. What's the word on the transition into the new monarchy with
Chucky
Charles over there? Yeah, like
Chucky Three Sticks.
Yeah. Is it hushed down now because of other concerns or what?
There's not much talk about him right now. It's more there's been a lot of talk about the latest budget statement they had yesterday. The fact that the new government is raising taxes for the middle. They call it Middle England. The average person, and also the upper middle class who are going to pay a lot of tax, while at the same time. They're going to keep government spending quite high. They're going to increase pension, the national pension, by 10%, which is quite large. And the people that are like disabled and on benefits, they're going to get the raises as well. So they're squeezing the private sector,
Mm-hmm.
and and they haven't really cut the size of government. And I think that's what the Bank of England and the investors wanted,
Yeah.
because the gilt market right now is pretty stable, but I don't think it's going to be that good. Our economy is going to go into recession. It already is. But yeah, there's not much talk about King Charles at the moment.
Yeah. Well, I mean, so it just seems like things are somewhat stabilized, from the guilt side of things, because that created a big panic. But yet, 2023, I'm sure more of the truth will surface and more wheels will fall off the bus. So, but anyway, people, as always, thank you for blessing us with your presence. Hit that thumbs up on the way out, and we'll be back at it next week. What up?
Someone is asking, who the heck is Chucky Three Sticks? That's King Charles III. There's 3 sticks.
Yeah.
Chucky.
I did catch that one. So, all right, my good people, be blessed, be safe, enjoy the rest of your day and weekend. See you guys later. Peace.
Peace.